What's happening, boys? We are back. We are back. And we are doing a video on... Let me just have a keys. Alright, risk management and account size. So, this is a very, very important subject because the reason is we don't want to over-risk, right? We don't want to get into the market and start live trading when we are beginning. Because I promise you, if you start to live trade, when you first start trading, you will lose money, and you will lose so much money that you don't need to lose, right? So I'm going to take it, you are a beginner, right? I'm talking to you and you are a beginner, right? What you want to do is first open a demo account, get the resources and get the strategy, study these videos or whatever strategy works for you guys, and get an understanding of your strategy and start to watch the market. Wake up whenever the New York Open is or London session or whatever session you guys are trading, and to start by watching it. You don't have to place any trades, don't have to start on a demo just yet. Just watch the chart and write down, get a book and just write down everything that the market is doing. Why to do this? The reason is it's because you're training your subconscious mind. And when you train your subconscious mind, it's going to start picking up things that it's seen a lot, right? So, you might start seeing, because when you write it down, it gets into your mind much better than if you just watch it, right? Watching it helps, but writing it down makes it, go more quicker. It gets in your subconscious brain way more quicker. And you'll start to see patterns. You might not realize it, but your subconscious mind, from writing it down and, watching the charts, you start to see patterns that you've seen before. And this is when intuition comes into play. Guys might be hearing people say like, oh bro, like why'd you take that trade? It's not really part of your strategy. And they will go, well, I just knew it was going to do that. Because I've been watching the market so much that they just know. It's literally a knowing feeling. It's your intuition telling you that the market's going to do one thing or it's going to do the other. And you've seen it before. And more times than not, they're going to be correct. Right? If they're a profitable trader, like for an example, take my mentor, right? Sometimes he does moves that he doesn't, teach. It's because he just knows what it's going to do. If US30 is going, if the US30 is going before market even opens, and then it starts pushing, sometimes he won't even wait for a retrace and a second push. Because he knows what type of market it is. He's trained his subconscious mind to pick up on little details that it will do in the future. Because trading does lots of things, of course new things, but it does lots of things that it's already done before. So sit down, watch the market, write what the market's doing, write maybe if it has lots of fair value gaps going up and it starts consolidating, does it normally go down right away to fill those fair value gaps? If there's a big news candle, does it go fill that news candle straight away? Is it a bit more hesitant? If it's at a level and before it breaks it sits there for a while, does it normally break and actually push when it gives you that second push, or does it go back up and make a fake out? All these little things count. And even if I could tell you all the knowledge right now and give you guys all the information, you guys will still not be profitable because you need that market experience. No strategy can come to you and be like, yo, this is all the strategy, you study the strategy, and then you have no market experience. You will not win. I fell down the wrong trap. And that's why I'm making these free videos for you guys, to guide you and direct you into the correct spots, right? I spent 1 to 2 years just not really getting any market experience, but learning the same shit over and over again, right? And I thought I was doing the right thing. I thought, learning as much information as I can and gathering it all in my brain would be doing the right thing. But that's great. That's helpful. That's definitely helpful. But you can't have the information if you don't know what it actually looks like while the market's literally live moving, right? You need to watch it move live. So that's the first thing, boys. Sitting down, writing down what the market's doing, and just watch it. I would say do this for about 2 weeks, probably around 2 weeks, and then jump onto a demo account. Once you've jumped onto a demo account, then you can start placing a little bit more trades. Don't be too worry about where your stop loss and take profit is. You don't even, if you don't want to, you don't even have to jump into straight away placing trades. You can just say, okay, by the look of this, I think market's going to go down. Or by the look of this, I think market's going to go up. And by doing this, you're not placing trades, so you're not worrying about other things like stop loss and take profit, but you're training your mind to know, like get the direction. So at least if it's a winning trade, you're getting that direction right. You don't have to be worried about all the other bullshit like getting stopped out, then hitting your take profit, or getting very close to your take profit, then reversing, hitting break even, or your stop loss. None of that, right? You're just worried about, okay, where is market going to go for today? Where is market going to go for today? But remember, before market even opens, we can have a tiny bias, but we're not trying to predict where it's going to go before it even starts to move. Remember, because we're supposed to react to the market. We're not trying to predict the market, we are reacting to what it gives us. Why are we trying to guess what it's going to do when it's going to show us what it's going to do, right? Doesn't that just make more sense, right? So once you have that, watching the market down, now you're guessing the direction, jump into the demo account, start to play around with your entries, where you're entering, where you're exiting, where you're putting your stop losses, where you're putting your take profit, and just start to play around with that. Because the reason, if you jump into a live account at first, especially if you have little to no market experience, you will blow your account, you will lose money, and then once you do that, then you will learn bad habits. Now that's a huge thing. Learning bad habits can turn your trading journey from a 6 months journey to a year to become profitable, or to 2 years, or to 3 years, right? So being able to avoid learning bad habits is take your time. Like I said in the last video, lay those bricks perfectly one by one. Don't focus on the big brick wall, just lay the bricks perfectly one by one. Otherwise you'll be overwhelmed and you might even not do it. So boys, one by one. So once you've got the demo account and you start to do great on the demo account, I want you guys to be trading a demo account and become profitable, and it might take a while, but become profitable on the demo account for at least 3 months. And you guys, this is going to happen, right? This is going to happen. You're going to have bad months. You're going to have good months. You're going to have bad weeks. You're going to have good months. Bad months. I mean, what the fuck am I saying? Good weeks, bad months, good months, right? It's going to come. It's all going to come. And by you guys using that demo account, you guys are going to train your mind to, understand that these bad and good months are going to come. And what I want you guys to do, you can do it, you can write it down in a book, or you guys can do Google Sheets. And I want you guys to track your trades, right? Write down, was it a long or short position? What stock were you trading, NASDAQ or US 30, right? Was it a win or loss? How much did you win or lose? What was your risk to reward? And then after you do that trade, write down a little note next to it. What could you have done better? What could you have done worse? You have to journal. Journal is a big thing. How do you think you can take a trade, you can lose that trade, and then you can go on to the next trade? Losses are only losses if you do not learn. Switch those losses into lessons. That's how you become better. When I started journaling, my trading skyrocketed. It absolutely skyrocketed. When I sat down and just started writing down, like, okay, why is this happening? Okay, it's happening because of, A, B, or C. Okay, let me test that A, B, or C on why it's happening. Can I do something about it? Did I win or lose because the market, was it a bad day? I'm not blaming it on the market, but did I win or lose because it was a bad day? Or did I win or lose because, I fucked up my psychology, or I fucked up my, my technical analysis? Or did I trade on news? Figure out the reasons why you're losing and figure out the reasons why you win so you can do them again. So you can compound those wins and you can cut those losses. That's all being a profitable trader is. Finding out why you're losing and don't do it again. Because every time you lose, you're just a step closer to winning. Because you learn something from the losses, right? So now that we've done the demo account, I want you guys to get a little bit of a feel of what it's like to live trade. If you guys can somehow, I think trading stocks like this, the minimum you can put into accounts like 17 grand, that's NZD. I'm not sure if you can do like an E-mini one and you can like place less amount of money. I'm not really sure if you can or not. But what I know is $17,000 is the minimum to open an account. So if you can't open a small account for like $100 or $500, that's a small amount that you're willing to lose. Because when you first start trading, whatever money you're going to put in, pretend like that money's already gone. Because it basically is already gone. But don't think of that money just going out of thin air and it's a waste of money. Think of that money as, your tuition. Like, people go to college for years and they expect trading to work overnight. It's not going to work overnight. I'm telling you now. And these losses aren't just throwing money away. You're basically paying for the lesson. So if you can't open a live account, a cheap one that, you're willing to lose the money, open a funded account. Because you guys might be emotionless on a demo account. I know people, boys are cut out, but we're back. What I was trying to say is I know people on a demo account that are profitable, but they're not profitable when it comes to a live account. It's because when you are trading a demo account, it's fake money. If you lose it, it's not that much big of a deal. It doesn't really matter. You can just put another 10 grand in their account, 50K in their account. It's paper money, right? But when you want to get a real feel, get that funded account, get that small live account going, so you can actually have a little bit of emotion behind it, right? So if you get a funded account, you can get like a 50K or 100K funded account, $100, $200, for just a regular funded account. And who knows, maybe you'll get lucky, maybe you'll pass the account, but that's not your goal. Remember, it's good to have good goals, but don't always look at those big goals. Get a funded account, and your goal is to feel a little bit more emotions inside the trade. So when you are trading a live account, a bigger live account, you have already mastered those emotions from when you traded that small live account or that small prop firm account, because now you have emotional attachment. So you have to learn to ease that emotional attachment to the side, right? Don't when it comes into your like live trades, when you lose, don't try to win your money back. Don't be like, oh, the market fucking stole it from me, man. It's my rent money. Nah, just let it go, learn and continue on. So what I'm doing now, I'm at the point of a funded account. So once you already get the motions and you've been trading and you've been profitable for 3 months on a demo account, and you've gone into that small live account or that small little prop firm account, and you've sorted your emotions out, then buy a prop firm account to make money. When you buy a prop firm account to make money, that's when you can start actually trying to scale that account. So let's say I buy a 50K account or a 100K account. I want to get like a $10,000 payout, because when I get a $10,000 payout from that account, I can now put that $10,000 payout into my live account. Lots of people, you hear people say, okay, I'm going to use like fucking 20 prop firm accounts, pass the account, get a payout. You don't want to be playing around with prop firm accounts. I'll just cut it as that. I'll save you guys some time. You want to be in your live account. You want to be taking your money out of that live account. You don't want to be getting prop firm accounts, because sometimes prop firm accounts won't even pay you out. If they have too big of a withdrawal, they won't even pay you out. They are too uncertain. Now, I know it's good for us to be uncomfortable, but when it's with the money that's going to, take us to the next level, we want to be in and out of a funded account as fast as possible. Get the money, get enough to start a live account. And when you have a live account, just because you have a $17,000 live account, it doesn't mean you have to be placing massive trades. You can still place small trades, $100, $200, $300, and scale it up from there, right? So get to that point where you get a nice withdrawal out of a funded account, put it in a live account, and then just slowly scale it out of that live account. There's no set percent that you should be trading. Don't trade, don't trade, I would say, more than 5% of your account. Anywhere between 1 and 5% of your account, that is fine. When I get my live account, just to scale it up a little bit quickly, I'll be using anywhere from like 3% to 5%. Because if you're using like 10% of your account, all it's going to take is 2 bad weeks or 10 losing trades and your account's gone. That's all it is. Look at it like that. But if you're using 1% of your account, it will take 100 losses in a row to blow that account, right? So think of it that way. Think of it in percentages. Don't think of it of how fast can I make my money. Don't think of it like that. Because if you think about it like that, you're already on the mindset, you're already on the track to lose, right? So what else do I need to talk about? So risk management and the account sizes. So I think I've covered everything that I need to. Just make sure you're only trading 1 to 5% of your account. Just do 5% if you're really confident, but I would suggest do like 2 to 3% of your account. Slowly scale that capital up. Look, boys, this isn't a fucking a sprint. This is the marathon. Take it slowly. Good things will come. Remember, especially if you're still in the learning process, there's no rush. I know we want to all get rich now, but if you chase it, it's only going to push it away. If you chase the butterfly is going to fly away. If you build a beautiful garden, you will attract the butterfly, right? The law of attraction. Research that. Understand that. Because it goes with everything. It goes with trading. It goes with life. It goes with networking with new people. You guys are one step closer to becoming a profitable trader by just watching this video. Now you guys can go to bed and realize, like, I'm closer to becoming, whatever, hitting my goals than I was yesterday. And that's the main thing, right? Are you getting closer or are you getting further away every single day? I'm going to leave it at that, boys. See you guys in the next one. Make sure to join the Discord. Make sure to study and watch all of these videos. And after this, we kind of already dabbled in journaling the trades because that's a very big thing. But I might make a separate video on that. But we also need to go on a little bit more advanced, right? We've covered the basics. We've covered how to mark your levels. We've covered, the take profit and stop loss. We've covered what are we actually looking for. A push, retrace, second push. We've covered the basics really well. We've covered what a fair value gap is. I'm going to be covering what liquidity is. Break of structure. We don't really use break of structure too much, but it's good to keep it in the back of your mind, right? Market correlation. How does the market correlate with NASDAQ and US 30? And then lots of trading psychology. I'm going to be posting lots of trading psychology videos for you guys because at the start you might not understand how important it is. But then you realize without good trading psychology, you will never become a trader. So let's get it, boys. One step closer. Let's go.